Morning. What was it? Anything important?
Yes, we had some job-related news that came in really good, actually.
Better than expected, huh?
Better than expected. Let me go back to.
Mike's crashing on me. Here we go. Let's take a peek.
And the final services PMI was good, but the non-farm payroll changed. They were expecting 177,000. They got 117.
So that's worse than expected.
That's worse than expected.
And that's a high impact, guys. When there's all kinds of different economic calendars and they rate things differently. The one I use is investing.com. And when it's got 3 stars, that means it's a high impact or high volatility expected. Then we have some lesser U.S. reports. And then at 10 o'clock, we had a big one, the ISM non-manufacturing PMI. That came in worse than expected. They were looking for 58.7 and got 55.3. And crude oil inventories will come out here in about 10 minutes. It says it right there. And then that'll be it for any high impact news for today. Okay. All right, so today we're going to talk just a little bit about multiple time frames. If you're a part of CFRN, you know that we very much believe in using multiple time frames to trade. If you're new to CFRN, you haven't been around, you may have learned some methodology that requires you look at just one specific time frame. The price flows on all time frames exactly the same. And what I mean by that, price flows on a daily chart the same way it flows on a 1-minute chart. From support to resistance, back to support, back to resistance, back to support, in a never-ending cycle. So we always start our day or our trading sessions with a look at the daily chart, just to identify where major support and major resistance is. The larger the time frame, the more important the information that it conveys. So we're looking at the S&P daily. Now we had our 3 indicators. The black line, that's the step line. Red and blue line, I call that red and falling. The official term is CFMA1. The green line is the BBC, stands for bull bear cross. When price is above it, we're bullish. As you can see, the pullback holds more often than it doesn't. When price gets below the BBC, we're bearish, looking for lower prices. And when it gets above, we're bullish, looking for higher prices. This goes all the way back into September, October of last year. The price is climbing above the BBC, then we get below. We put in this low, and back above. And you'll notice red and falling walks price down. Blue and climbing walks price up. And so when price drops to the BBC, we expect that to be good support. When it drops to red and falling, we expect that to be good support. When it drops to the step line, we expect that to be good support. Okay. So we talked all day yesterday about will it hold, will it hold, will it hold? It held yesterday, held last night. We ran up a bit, but we can see now it's not holding. So on our 30-minute chart, we just passed through one of our final trade 2 targets from last night. And let me just show you that real quick. That would have been this is one of them. We had a number last night, but 38.62. to 38.60 to 38.46/47. So as you can see, we've just traded through the weekly trading zone. Now, so far on the week, I've got that right here. Let me find it. There we go. That's in the discussion group, so you guys can all see it yourself. We've issued a total of 51 alerts, 9 never triggered, still waiting on 10, 32 actionable alerts, 4 stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure, and a little 3-step methodology that I teach all of our traders. So 13% of actionable stopped out. That's better than normal. On an average week, we'll see about 20% get stopped out. Now, looking at our 30-minute chart, we can see that we've got support here at 38.33. Now let's go back and look at our daily for a second and put that in context. The low of the session. Come on. And move my little box and be able to read it. 38.33 and a quarter. Okay. So this is what we call a window of opportunity. Price can take out that low on a daily chart. There's not really any obstacles in the way until we get to the 50% Fibonacci retracement. Now this fib is from this low to this high. When we first dropped below the BBC the other day, we hit that 50% fib and bounced back above the BBC, climbed all the way to red and falling. Red and falling took us back down to that 50% fib retracement. And we also hit the 24% fib of that entire move up that I just showed you. So 50% fib of the last leg up, 24% fib of the entire move. So price has come down. You see this area here where it's the 38% fib of the just the last leg up. Before it was the 38% fib, it was resistance, 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 resistance. And then we finally got through it. And then as we came back to it, it became support. And then as we got back below it, once again, it's resistance. So we're sitting right on top of that important price, important area right now. So we want to see price take out the current low. And because we're at a weekly trading zone, when price drops to a weekly trading zone, we expect it to be good support. Now we'll get another candle here in 4 minutes, but that creates an issue because price is below the BBC. And so to go long would be a counter trend type of trade. Now of the alerts that are in the alert channel, let me show you. Currently we have 6,702 over the last 134 weeks. Every one of those is a trend trade as defined by a 30-minute chart just like this. And the trend is defined by is price above the BBC or below, okay? If it's below, we're only looking for short trades. If it's above the BBC, we're only looking for long trades. Only 3 things happen at a weekly trading zone. The most likely thing to happen is consolidation. That's what you see right here and here, here. Now the yellow lines are last week's weekly zones. The previous weekly zones still hold sway over the market into the new week. So price came down and was rejected. Only 3 things happen at a weekly zone. The most likely 75, maybe even 80% of the time is going to be consolidation. Second most likely is what you see here, rejection. That's when the price, when the candle closes for the 30-minute period, the only thing left touching is the wick, okay? And you can see price goes from zone the zone, back to the zone, down to the zone, down to the zone, back to the zone, down to the zone, back to the zone, down to the zone. We've been publishing the zones since December 14th of 2009, okay? So we expect the zone to hold as support until proven otherwise, okay? Now we caught a bounce from the zone, which is 3846/47. We bounced up to 3853. Our next weekly trading zone on the way down is 3817/18. So we'll look for a window of opportunity to trade. I'll look left. Now, if you're wondering why price bounced right here, have a look. Okay. Remember what I said about what was once support often becomes resistance. It often becomes support again. Okay. So if you look at the red horizontal line on my cursor, from these, see, we had a trade here. I think this was the opening trade Sunday night. The entry was 38.32. The final trade to target was 38.68. So that was a really nice trade, 34 points, if you stayed in it until the final target. Okay, so price has now come back to that same area and found support. Right below that area is a bullish cross. That's when the blue line gets above the green line, okay? And that bullish cross has never been tested. What I mean by that is price has never come back to test that area. So what we want to see is we want to see price get below this area. Right here. Come on. We need to get below that area of potential support. And then we'll find a trade down here. Probably something along the lines of 38.23 down to 38.21. In fact, I'll just put that in the alert channel. And Valerie, if you want to grab the charts, you can go ahead and do so. This will be alert number 6703, ESH21. We're going to look to get short. 38.23. Initial target will be 38.21. There's always an initial target worth $100 per contract, whether it's the S&P, the Dow, the Russell, crude, gold, the NQ, okay? And then there'll be an additional target, and then the final trade to target is always the weekly trading zone. So if we get short at 38.23, our initial target will be 38.21. We don't really have any other obstacles in our way. And so the weekly trading zone will be the final trade to target, 38.17/38.18. So let me put it in the other channel. Okay, so the alert I've just put in the alert channel. S&P, we want to consider being short 38.23 with an initial target at 38.21, and then the final trade to target be 38.17/38.18. Okay, so you're looking at Valerie's chart. And Valerie, if you want to talk about the chart, talk about what you're seeing, feel free to go from the 30-minute to your 5-minute to your range chart, whatever, however the spirit moves you, you're in control.
Okay, that's a dangerous place to be. Okay, I was just making note. Sorry. Just make a note of the alert 23 to 21. 17.18 is my weekly trading zone. So what first thing that that I want to do whenever I am considering the a logic alert is to check and make sure that when I set my stop loss, that I have enough profit target in the making. For the most part, we have multiple targets on our logic alerts that will allow us that $300 initial stop loss. There are times, however, that the window of opportunity is a little smaller, and so what I will, so that's my first check. Make sure I've got that that's 6 points. We're talking on the ES here. So if I have that 6 points in my profit target, which I do. So then this is the setup that I use. You can see that these three charts here are the three time frames that I generally use. The 30-minute, the 5-minute, and I've got the 4-tick range up. It's just as often that I may employ the 1-minute chart, but to correlate with what Michael does, I'm going to go ahead and use the 4-tick range here. So you all should have been to open houses and stuff before, or own the indicators. So this is something you're familiar with. The other tabs I have, if I'm also looking for other opportunities, today, Dwayne's going to guide us, but I have these so that I can watch these at the 30-minute level, what's going on in gold and the crude, and then also the YM. Okay, so I'll go ahead and back to tab for my ES.
Now, from what we saw just for a moment there on Valerie's 30-minute chart of the Dow, price had almost pulled up to the BBC. On the S&P, we still got quite a ways to go. Oh, she still got others right there. So we're a little bit closer to the BBC. And remember, if the 30-minute chart, if price is below the BBC, we're only looking for short trades. Prices above the BBC, we're only looking for long trades, which we will execute on our smaller time frame. Now, this is where multiple time frames can become an issue for some traders because of a lack of patience. Because when you're looking for a trade setup on a 30-minute chart, you may be waiting for a while. You may even be able to identify the window of opportunity like we just did on the S&P. I turned it into an alert, but that thing, the bottom could fall out of the market and it could trigger in the next 20 minutes, or it might be a couple hours from now before it triggers. So you have to change your thinking as you move into using multiple time frames. Okay, back to you, Valerie.
I'm sorry, I needed to provide. I'm in the middle of sending this to.
Oh no, take your time.
Somebody. Okay, I've got folks that are still trying to get in here. Okay, and so really that is the key. Is the YM here? The Dow is further along in this process. Okay, because this is the kind of price movement that we expect. Price pulls away. We created the bearish cross, and then what we expect is for price to pull back to the BBC, give us a down close, because more times than not, the BBC is going to hold. Yes, sir?
Oh, I'm sorry. Right there at the bottom of those candles that Valerie had on that 30-minute Dow, there's a weekly trading zone this week at 31,340 / 31,345. $31,340. There you go, / 31,345. Okie doke. Now, what do we expect? We expect that to be good support until proven otherwise. And it has been. Price came right down to it. I've got 1, 2, 3, 4 5 30-minute candles sitting right on top of it. Now price is reaching up to the BBC overhead. We expect that to be good resistance, just as we expect that weekly trading zone down there to be good support, as it was, created this bounce. As we reach the BBC, we expect that to be good resistance, okay? So once we get to that resistance on the 30-minute chart, which obviously will take a while, once we get up there and we find that it is good resistance, and how will we know it's good resistance? Because price will stop moving higher. Buyers will stop buying, and we'll start printing a red candle. And that's when we'll look for our window of opportunity there. If you have any questions on anything, feel free to put them in the chat box. Don't be shy. Nobody's here to judge you or any of that stuff. If you guys don't know me, I'm Dwayne. I think most of you probably know me. You know Valerie. Just make yourself at home. We're a laid-back community. We're more like family. So if you're new to these parts, don't be shy. Nobody's here, like I say, to judge you in any way about how much you know about markets. It's not that kind of an environment.
And honestly, that's a difficult thing in wanting to illustrate, the application of the multiple time frames, is because there is no time. You can't say, okay, between 10 o'clock and 11 o'clock, we're going to go ahead and trade this, because we can't know ahead of time what the market is going to do and to be looking like. So this is a great time, if you have any questions, to kind of pose those there in the chat so that Dwayne can respond to them, because really, right now, that's our job, is to wait.
Now, many people will try to convince you, okay, I won't call any names because we're not like that. Many people try to convince you that they know what's going to happen next. That's not how God created this universe. He did not give Adam the ability to change the past or to know the future. And those two things are inextricably linked for eternity. So since God didn't give us the ability to know the future, with our indicators and strategy, what we can know is what the next high probability move is in any market, in any time frame. Now, over the last 6,000 plus alerts and 134 weeks, 20% have been stopped out because the market did not do the next high probability thing. You can see obstacles. You can logically determine where the market's going to next find support and resistance. But about 20% of the time, support and resistance will pop up out of nowhere for no apparent reason. There's nothing you can do to change that. 9 out of 10 traders burn up all their time and money trying to find a way to never get stopped out. They're looking for something that doesn't exist. Professional traders don't waste any time or treasure trying to figure out how to not get stopped out. They invest their time and treasure trying to find the next opportunity, knowing that along the way they will get stopped out, because getting stopped out is as much a part of trading as breathing is a part of life. Ken R. asks, how can I create the zone for myself?
And
our members are given the zones.
That's what I just did. I did the actual physical, but like you were saying, it's
we publish them every Monday morning for our members at 6:15 a.m. Eastern since December 14th of 2009. And once we publish them for the week, they're carved in stone. They don't change. Think of them as fixed support and resistance. And your indicators, think of those as dynamic support and resistance. And price in every market and every time frame flows the same, from support to resistance, back to support, back to resistance, back to support. Over and over again, never-ending cycle. The Russell also is trying to pull up to the BBC. And the NQ is showing the least interest in pulling back. The NQ sometime. Now, the 4 major indices tend to travel as a pack. In other words, if one of them is rising, on most days, all 4, S&P, Dow, Russell, NQ will be rising. They'll all be falling. they're not in lockstep, and no one index ever always leads the pack. Yeah, S&P can start out first, or the Dow, but just think of them as pack animals. And when you see them all four moving in that same direction, whatever trades you take on any one of them gives you greater confidence in the trade, because you know that the pack is with you. So I'm going to put an alert in the chat box, or not the chat box, but in the alert channel. I'm going to go ahead and stick one out there for the NQ in case we keep dropping. Valerie, you feel free to look at whatever you want to look at, whatever you want to. No, Ken, the weekly trading zones are proprietary. That's my golden parachute. When me and Michael decide to retire someday, we're going to fill a stadium and we're going to teach people how to calculate their own weekly trading zones. That'll be our legacy to the industry. But you get, as a member, you get them every Monday morning, 6:15 a.m. Eastern. We put them in the Telegram channel, and we also send them to you via email. Okay, doke. So on the NQ, let's see what we like.
I'll go ahead and bring that up so that
I like 12, 8, 10 to 12, 800 with potential support at 12,775 and potential support at 12,725, and then potential support at 12,685, and the weekly trading zone at 12,670 / 12,671. Okay, so I'll put that in that channel. And I'll copy it into the other channel. Okay, and so here's how it reads on the NQ. You want to consider being short at 12,810. Initial target 12,800. Now I said the initial target is always $100 per contract. The NQ, because it's so volatile, the initial 10-point move, the NQ pays $20 a point. So the initial target on the NQ is $200 per contract. So the idea is to be short 12,810. Initial target 12,800, second target 12,775, third target 12,725, next target 12,685, and then the final trade to target is the weekly trading zone below at 12,670 / 671. And price is pulling up right now on the NQ to the weekly trading zone at 12,885. Again, price dropped from the zone at 13,091 all the way down to 12,885. And hang on, let me get my calculator.
And Caesar, to respond to your question, do you use the Slingshot on the 30 and the 5-minute charts? Dwayne says that as time frame increases, gets larger, he uses the Slingshot less. Okay, so it's more important. So I would look at it on the 5-minute chart.
Now the drop we had this morning on the NQ from the zone at 13,091 down to the zone at 12,885. That's a 205-point drop at $20 a point, which is what the NQ pays. That's a $4,100 per contract move. I always have traders ask me, can I just trade zone to zone? You can, but you need to learn market structure. You got to make sure you're on the right side of the BBC. So the answer is yes, but you have to learn a few things first before you can start doing that. And in the afternoon broadcast today, I'll go over the NQ in detail because it makes a great example because the chart never printed an exit signal on the way down. So what we're doing now on the NQs, we're consolidating at the weekly zone. Remember, only 3 things happen at a zone. The most likely consolidation, it's happening right now at the zone, 12,885/12,886. All right, so we've put out an alert on the ES, we put out alert on the NQ. Let me go back on my chart and take a peek at the Dow. Okay, the Dow is inching in on the BBC. We'll get another candle in 12 minutes. Now, on my charts, I'm going to leave them like they are for the afternoon broadcast. The yellow lines on my chart are last week's weekly trading zones. The gray lines are this week's zones. The previous week zones do hold sway over the market early on in the week. And every now and then we run across a zone that's important for weeks. We had one on my chart the other day. If you go back and watch any of the afternoon broadcasts, we've got over 1,600 daily shows archived at youtube.com/CFRN. So just below the BBC on the 30-minute, we've got a last week zone on the Dow at 31,435. 31,435. I can get it right on my chart there. 31,435. 31,435. Yep. And then the BBC is just above that at 31,468. You'll notice on the right-hand side of the charts where price is, you can see what the price of the BBC is. You can see what the price is of red and falling, blue and climbing.
Yeah, I pretty much take all my runners off.
Oh, do you? Okay. I got you. Okay. Well, you can have it show up, and this afternoon when we have my chart up on the afternoon show, we'll go over that. So as you can see, when you're going to trade multiple time frames, now there'll be times that you sit down in front of your charts where the 30-minute is giving you the trade setup. We look at the daily to identify major support and resistance, and we go to the 30-minute and look for the trade setup. Once the 30-minute gives us a trade setup, then if we need, we will use the smaller time frame to help us establish our stop loss, because we don't want to risk more than $300 per contract per trade, less when possible, based on market structure. So all of our members, I teach them a simple 3-step methodology for doing that. The first time we have a private one-on-one mentoring session. And as a passport holder, you have unlimited access to one-on-one mentoring. A lot of new people will book, a couple sessions a week in the beginning, and then falls off to once a week, and then once every other week. It's just whenever you need help. All you have to do is book it. It's included, it's unlimited. Plus, our discussion group is open 24/7, 365. And everybody uses the same strategy, same indicators. We speak the same language. So you'll meet some really nice people there. Everyone, it's a very encouraging environment. People share their trades, they share their successes. When they get an owie, they share that. And there's people there to not laugh at you and poke fun at you, but to encourage you, help you get back on the horse, So it's a real good environment. Now, I've looked at the S&P, the Dow. The Russell is still trying to pull up. Let me glance at that again. Yeah, okay, the Russell's pulling up to its weekly zone at 2236/37. So when we get a new candle here in 8 minutes, if it starts printing red, we might be able to take action on the Russell. And that zone, Valerie, is 2236/37. So we're right up at it, guys. So again, when we drop to a zone, we expect support. When we rise to a zone, we expect resistance until proven otherwise. What market haven't I looked at? well, crude inventories came out, so I'll look at my crude chart just to see what happened. Well, crude is on a tear.
Yeah, I'm sure it's to the upside.
Hey, very good. Okay, we've got a weekly trading zone. Crude right now is at 61.55. We got a weekly trading zone overhead at 62.15/62.20. We don't trade news events. Some people do. Some people specialize in it. It's what they do best. It's their thing. We prefer to let the news come out. So we don't trade the news. And we don't trade the reaction to the news. What we trade is the follow through to the reaction of the news. So once we get a new candle on crude, we may just have ourselves, because we're above the BBC, so we'll be looking for a long trade or to buy the market. Prior to this big rally, crude went zone to zone, $850 per contract. It actually went from the zone up to the zone, back down to the zone, back up to the zone. So just like on a Fed announcement or crude inventories, you know, some people trade the actual event. And obviously, if you were long crude during this event, yeah, you did well. Now, of course, Michael and I, we tried trading the news back in the beginning when we started trading together in late 2005, early 2006. But it was like gambling, you know. Sometimes we were on the right side of the market and sometimes we weren't. And so we found no real consistency. So we decided it was better to just leave it alone. Let the news come out, let the markets react. And then when price goes back into that rhythm, leg retrace, leg retrace, leg retrace. That's all we're looking for. Is we're looking for a leg, a retracement, and then an opportunity to participate in that next leg to reach our goal for the day. 2 points a day in the S&P pays $100. 10 ticks in crude or gold pays $100. All the initial targets on all the alerts, with the exception of the NQ, which is $200. Now you say, well, $100, that's just awesome, but I can't live on that. Well, all of our members get a 24/20 blueprint, walks you through everything, write the business plan, write your trading plan. Did you know 9 out of 10 traders don't have a business plan and a trading plan? And did you know that outside of our walls, 9 out of 10 new traders fail? It's a tragic statistic, but it is a fact. The blueprint also walks you through putting together 10 consecutive days in a row where you reach your goal in 10 trades or less before you go live. It's important that you understand the strategy, and you're not trying to prove anything to us. You need to prove it to yourself so you have confidence. You put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Then the blueprint gives you the green light to go live with 1 contract. Now your goal, once you're trading real money, is to increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. The big difference between the first one and the second one is the first one came out of your pocket. The second one comes out of profits you earned in the market trading 1 contract. So that 2 points that used to pay you $100 a day, the same 2 points now pays you $200 a day. The blueprint tells you when it's time to add contract number 3, number 4, number 5. You only add 1 at a time when it's time, and you only add with profit you earn in the market. Obviously, if the blueprint's saying, okay, it's time to add number 4, if you don't have the profit available to add number 4, you should not be adding number 4. So we're 3 minutes away from a new candle. Anything look interesting to you, Valerie? I've looked at, the only thing I haven't looked at, I think, is gold. Let me peek at that. Yeah. Okay, gold is below the BBC, and gold is sitting right on top of a weekly trading zone, 1709/10. It's trying to bounce up to the BBC. I'll go back to my ES.
So whereas some of you may be comfortable in trading this pullback to the BBC, that's not something that you're going to see any alerts for. Dwayne's not going to put out an alert for the pullback, even though we expect gold to make its way up here to 1720. We are going to wait as a community for the pullback to the BBC, and then for it to hold, which is the high probability outcome, and for price to show us its hand to the downside. That's what we expect. That's kind of our scenario that we wait to play out. But in this 30-minute candle, there are going to be long opportunities on other time frames that you may be accustomed to taking, but it's not something that we do.
Our guiding light is the 30-minute chart. Now, please hear this. There's nothing magical about a 30-minute chart. The only magic in any chart or any time frame is the magic that you bring, because the answer to solving the market equation is not out there. It's inside of you. Now, lots of people do look at a 30-minute chart, just as lots of people look at a 5-minute chart. And so part of our ability to know what the next high probability move is in any market, in any time frame, is because if you have a group of people under any given set of conditions, it's pretty simple to get a high probability idea of how that group will respond to whatever. Fire in the theater, you know you're not supposed to yell fire in the theater. If you're in a crowded theater and somebody yells fire, it's a high probability that everybody's going to get up and stampede for the exit. If there's one guy sitting in that theater and you yell fire, he might get up and run to the exit, or he might stand up and look around and go, where? So when you're looking at a time frame like a daily, like a 30-minute, a 5-minute, one that lots of other traders all over the world and institutions are looking at. And keep in mind, the institutions are looking definitely at the larger time frames, like the daily we started out on. That plays a huge role in you being able to determine what the next high probability move is, with the understanding that 20% of the time, it's going to do something other than the next high probability thing. So as Valerie was just saying, price moving up to the BBC, that would be a counter trend trade. And of the 6,000 whatever alerts in the channel, over 134 weeks, those are all trend trades. Now, counter trend trades aren't illegal, immoral, or fattening, right? There's nothing wrong with them. They just don't have the same high degree of probability as a trend trade. So because we're trying to teach people how to become consistent in the market, we want to be consistent in the type of trade setups that we provide them with. So on the Dow chart there, you can see price ran up. It tagged the BBC. We expect that to be good resistance. So when we touched it, see, we got that retracement. Now we're going up to test it again. Again, this is where patience comes in. We need for the market to prove itself. It may not prove itself until the next 30-minute candle, okay? Now, let me see. The ES still has quite a ways to go. However, now the ES has pulled up to red and falling on 30-minute. You can see that right there on Valerie's 30-minute. And so if price, we've got a zone below at 38.46. So I'm going to put another alert in the channel. Now the previous alert will still be valid, but the market has handed us a new window of opportunity. Alert number 6705, ESH21. So we would consider being short 38.50, we get 38.49. 38.49, initial target 38.47, and that is a weekly trading zone, 38.46/47. Okay, so that one doesn't have a second, a third, a fourth, because on every alert, there's a final trade to target. On a short, it's the zone below. On a long, it's the zone above. Okay, so that's just a little 2-point opportunity, 38.49 to the weekly trading zone at 38.47. That's on the S&P. Now, once you understand our methodology and strategy, as price, you know, we're printing a green candle, so we certainly have no interest in selling a green candle. Our 30-minute candle is green. We need to see price come down and get below the step line, that's the little black line. And then once price is below that step line, that's an entire window of opportunity. It really starts at like 38.50, but I always try to err on the side of being conservative. So, and I don't mean politically, I just mean in most things. So if you wanted to get short at 38.50 down to the zone, you could. The official alert I put in the channel is 38.49. Okay, let's see, is the Dow. Now, here's the issue with the Dow. If price starts to come down right now on the Dow, you could get short, say 31.420. The problem is we expect the red and falling to be good support. If price drops down to red and falling, okay, now red and falling is bearish, call for lower prices, but that's when price is to the left side of red and falling. Right now we're in a situation where price is directly above red and falling. And so if price were to start to drop, okay, a trigger could be 31.420, but then red and falling is sitting right there at 31.400. So I don't like to work in such close quarters because one of the mistakes that a lot of people make with trading, especially with futures, is they start out with whatever time frame, and then they just start ratcheting it down, ratcheting. The idea is that I want to ratchet this time frame down so small there's no room for error. However, trading Emini Futures, if there's anything you need besides internet and a computer, is you need room for error. So while that is a valid window of opportunity, 31.420 to 31.400, not going to put it out as an official alert because it's just too close. The S&P was a different story because we're already below red and falling. We're already below the step line, below the BBC. Let me go back and look at that. Okay, so the ES is still trying to climb and get up to the BBC. So that little alert that we put out, it remains valid. The alert we put out before that, it remains valid, okay? Once price finds resistance. Now, how do we determine resistance? When right now the high of the current candle is 38.59. If nobody's willing to pay 38.59 and a quarter, price will start to drop. It's that simple. You look at any chart and you look at, you know, the highest price on that chart. The reason that's the highest price is because nobody at that point in time was willing to pay the next tick higher. It takes financial commitment for prices to rise. It takes no financial commitment for prices to fall. When the market reaches a point where buyers feel that they're up against insurmountable odds, they're up against a wall that they can't scale and overcome, they simply stop buying. They don't want to waste their money. And I'm talking institutional big buyers. They stop buying. And when sellers, contrarian thinkers, see that, they see that buyers have stopped buying at this point because buyers have stepped back looking for a better entry price. That's when sellers come in and go to work. And that's one of the reasons, other than gravity, that markets fall faster than they rise in most cases, because sellers pounce. So Valerie, you see anything interesting? I'm looking at the ES, it's still got a ways to go.
No.
Down.
We're in a holding pattern.
We are in a holding pattern. Now, on the Dow, if it were to, go ahead.
What I would say is, if the ES, as this ES trade, if it starts to become into play, since I have a 2-point profit target, I will need to find an entry point that will allow me 2 points to set a 2-point stop loss. So I'm going to risk equal amounts of money. I'm not going to risk more than $100 to make $100.
Now, when you see an alert that, has an entry, initial target, second target, third target, fourth target, that you want to look from the entry price to the final trade to target. Okay, so this alert has the potential for 8 points total, or 12 or 20 or whatever it is. No matter how many points it has, we still don't want to risk more than $300 per contract per trade, less when possible. However, we don't ever want to go below that 1-to-1 ratio, and that's what Valerie was just explaining. There's methodologies out there that'll teach you to, risk 10 points to make 2 kind of thing. That's bad math, bad science. You'll hit a spot at some point where you have a couple, 3 days back to back that are just brutal, and all your weeks and months of hard work vaporized. Boom. So please don't fall into that trap. You never want to risk more than the potential profit in any setup, in any window of opportunity. Now we're getting a retracement in crude oil. It's pulling back to the zone. Remember, we said we would wait for a new candle to see what happened, and new candle opened red. Where do we expect it to pull back to? Weekly trading zone at $61/6105. If we pull back there, find good support, consolidate, as we start building a green candle back up, that's where we'll be looking for our long trading opportunity. And so I won't even put out an alert on that until the pullback is over, consolidation is found, we start building a leg to the upside. That's when I'll put that alert up. Okay, let me look at gold again. Gold is at the BBC. Okay, we expect that to be good resistance. Again, we won't get another candle for 20 minutes, 19 minutes. And we want to see that candle red. And then we'll be able to potentially trade that short down to potential support, which is step line, then red and fall, and then the weekly trading zone. This is the life of a 30-minute trader. Lots of patience, okay? But so many people in one-on-one mentoring sessions tell me that they have a hard time keeping up with the 4-tick range chart, okay? So you have to learn to not only look at multiple time frames, but to begin to think in multiple time frames. The 4-tick range chart, as you can see, this is a great example of why we use that in the live training room every day. Because if we use the 30 minutes, you might sit there for an entire 2-hour session and never get, and Michael would never get an opportunity to teach you the thing he's there to teach you, which is the trade setup. Bullish cross, price pulls away, price pulls back, up close by the open of the next candle. That would be a pretty boring 2 hours. So the purpose of the room is not so that you can piggyback his trades to earn a living. because that would do you no justice. Purpose of the room is to teach you the strategy, the underlying principles, so that you can yourself. And then you can trade on any time frame that you want. My favorite go-to chart is the 30-minute. I've been using it for years. It's where I'm comfortable. It's where I'm at home. It's where I find the highest probability, lowest risk trade setups. You may find, Michael likes a 15-minute chart, okay? He likes that as his higher time frame. Now, in the morning, he doesn't bounce back and forth between time frames. He just trades whatever's in front of him on the 4-tick range, and he does a very good job of that, okay? So there's that option, the mechanical method, or you can learn this method, okay? The only difference really between the two methods is the time frame, the amount of risk, and the potential profit, okay? So if you have any questions, we'll have to wrap this up here, guys, in about 15 minutes, but if you have any questions, we're happy to answer them. Just put them in the chat box. All right, so we can't do anything with gold yet.
I don't know how you guys are with your notations. I use paper, as you can see. I like to notate my charts, annotate my charts. So whatever works for you. If you're looking at different charts, different time frames, you know, my anticipation is that because on this ES trade, if it does come into fruition here during the time that we have left, my entry is likely going to be on the 4-tick or the 1-minute chart. So I went ahead and put my red line here on the 4-tick range chart, which tells me that's my stop loss. My stop loss is going to be red. So this is where my structure will be. I'll have to be able to put my stop behind a swing high below this, at or below this point in order to take the short trade at 38.49 with a profit target of 38.47.
The Russell, you know, guys, I'm not going to put an alert because there just won't be enough time for people to react. 22.39 down to the weekly zone at 22.36/37. There's a 2-point window of opportunity there. The price is already, let's see what the swing low of this 30-minute candle is. 38.9. The zone below, which we expect to be support, is 36.37. So if you want to trade that, Valerie, I mean, feel free by all means. If you've got a chart up, if you
know, I've never
if
traded the Russell.
Yeah. Okay. So stick with what you're comfortable with. But you guys, you'll be able to see it on her chart right there. And let me move this out of my way so I can see. You see where we're at right there, guys? Where price is on the 30-minute on the Russell. Now, okay, we'll go right back to that 5-minute chart because that was beautiful. We've got a zone, weekly zone at 22.37, but on the 5-minute, price is above the BBC. We need price to get below the BBC on the 5-minute. Well, the zone's at 22.36/37. So that trade, based on that reason right there, that's not going to come together for us. Anybody have any questions on that? That's really important. That's kind of the heart of multiple time frames right there. In order for price to make that drop that we just talked about, it would have to get through the 5-minute BBC, and by that point, we're already through the weekly trading zone. Okay, so the Russell, no go. Glance at Crude again. Crude is almost back to the BBC. I'm sorry, almost back to the WTZ, the weekly trading zone, 61/6105. So Valerie, if you want to just point out anything that you see, I'll just go through all the charts one more time and see if we can see. Now, here's the thing, guys. We won't put on a trade just to entertain you. okay? If the market does not come to us and bring us the opportunity that we look for, the opportunity that's represented by those 6,000 plus alerts in the alert channel, then we don't force it. And that's another place where traders often get into trouble, because once you decided you want to be a trader, well, then if I'm a trader, I should be trading. If I'm a fisherman, I should be fishing, right? But part of trading, part of being a good trader, is learning to recognize when there is opportunity in the market and when there isn't opportunity, okay? And so we have some pretty strict parameters as to how we define opportunity. Now, there's all other kinds of opportunity, but we've set our sights on what we understand, and then we just wait for that. We wait for price to come and deliver what we're looking for. We trade that. 20% of the time, price does something other than the next high probability thing. So as price drops on crude, we'll expect that to be support at the zone. Let's see what else we got here. Gold is still at the BBC, but it's pushing up against it. So, you know, if this candle were to close above the BBC, then we'd look for a little pullback to the BBC, and if that holds, then we would start considering a long trade because we're above the BBC. Right now, we've just come up from below. We expect it to be good resistance to proven otherwise, and it hasn't proven it yet. So the next candle could open, turn red, start heading down. That would give us an opportunity. Any questions, guys? Got any questions at all about anything? Put them in the chat box.
Okay, so if we were trading the 4-tick range with our methodology, we have a trend line trade here, 1118, put in a higher high, so we could also take this trend line trade, you know, a few seconds later, whether or not you're still in this, you may still be in this trade, but just showing structure-wise, and then another opportunity here. So, you know, on the larger time frame with respect to the alerts, we do not have an opportunity, but by using our indicators and our method, there are these opportunities. This one's questionable.
And Michael trades
going down too straight, right? So I'm sure
Michael
we get a
trades
recap
every day.
Yeah,
and Valerie does too when she's running the room in the mornings. You know, they just trade right off the 4-tick range chart without even concerning themselves with the higher time frame. So you get to decide what kind of trader you want to be. Do you want to be the mechanical trader? You want to trade the 4-tick range? You just want to trade what's right in front of you? Or do you want to look at the bigger picture? Whichever one you decide you want, then we'll help you become that trader. We'll teach you the things you need to know to become the trader that you want to be. You can't be both, okay? And that's part of writing your business plan and your trading plan. That's where you define and do some soul searching, because you're writing the rules to how you're going to run your trading business. It's nobody else's trading business. It's your trading business. Sometimes people will be too strict with their rules, sometimes a little loosey-goosey, but you'll figure it out, okay? The blueprint's there to help you with that, and the one-on-one mentoring sessions, we help you with that. We help you determine what's realistic, what's not realistic, and that's another thing, another pitfall for traders is unrealistic expectations. Things like, well, my goal is just to take 20 points a day out of the S&P. Well, that's an awesome goal. It's just not a realistic goal. Taking 2 points a day out of the S&P, that's very realistic. And you can make as much money as you need to make with 2 points by increasing the number of contracts you trade with profit. Remember, you never add more than one contract at a time. Start with 1, go to 2, go to 3, and you only add additional contracts with profit you earn in the market. I won't say you can't blow up your account by following those rules, but, well, you'd have to break a lot of rules in order to blow up your account. Because once you go live, if you have 2 days in a row where you don't reach your goal in 10 trades or less, you come out of the live, back into the sim. That's not a walk of shame, okay? You have a one-on-one mentoring session with me or Michael, Valerie, any of us, all of us. We walk through your trades with you, try to help you understand what happened. Then when you get your confidence back, then you step back out into the live market. So again, I won't say you can't blow up an account, but you're going to have to break a lot of rules, okay? So that should give you some peace of mind. Waking up every morning with that knot in your stomach, is today the day I'm going to blow up my business? That has to go away. That shouldn't even be part of your thought process in the morning. You're going to do what your trading plan says you're going to do. That's how you're going to trade today. You're going to manage your business the way your business plan says you're going to manage your business. All right, S&P still trying to pull up to the BBC. The Dow, interestingly, has traded through the BBC. Now, this could be a head fake to the upside. It could be the real deal. If you look to the left there, right where price is now, you'll see that bearish cross that we just traded through. Now, the BBC's potentially good resistance, and it was, because the first time we tagged it, it sent us all the way back down to the step line. It dropped us from like 31,474 down to about 31,405 over to the right there, Val. Yeah, when we hit the BBC right there on the previous candle, see how we ran up to the BBC where the wick is? That candle you were just on. The price, that was a blue candle all the way up to the BBC. But before that 30-minute candle closed, price started to retrace. Then the next candle opened, and it retraced all the way down to the step line. And red and falling, yeah, right there. And then buyers came in. So see, it was good resistance. Now we may be getting a chance to see the until proven otherwise. Okay, so the Dow is in question. Let me look at the Russell real quick. I'll go over all this again in the afternoon broadcast. I'll go through the daily chart. I'll go through all the logic alerts from last night, the Concierge Trade Alerts. We'll cover everything as we always do. David Grant will be joining us today. He joins the show on Wednesdays at 1 p.m. Eastern. Talk a little crypto. The Russell is doing the same thing as the Dow. It's above the BBC, but we're not just going to jump in and go long yet because the market hasn't proven it hasn't proven that it really wants to go higher. Our methodology requires the market to prove itself. Okay. And so the market it's transitioning now, possibly from a down leg, to start building some legs to the upside. The 30 minutes between when the live training room closes every day and the afternoon broadcast starts, that 30 minutes can often be very active because 11:30 a.m. Eastern is when the London or the UK markets, London closes. All right, so let me go back and look at crude. Crude should have made it. No, never did make it all the way down to the weekly trading zone. Let me look at gold. Now, if you decide that you want to be a 30-minute chart trader, as opposed to trading the faster time frame like the 4-tick range exclusively, when you have situations like we have right here, there's no stress, there's no pressure. Take a walk, pet the dog, make a sandwich, you know, you should always have some kind of work handy, even if it's a good book to read, or a podcast you enjoy, something to occupy you until the market delivers the setup you're looking for. And the market just has not given us a tradable event based off of a 30-minute chart so far this morning. Okay, we've only been in here a little over an hour, so that's the life of a 30-minute trader. But here's the thing, because it's futures, you're not locked into the 9:30 to 4 stock traders are locked into. Today is the Wednesday session right up until 5 p.m. Eastern. And then tonight at 6 p.m. Eastern, that will begin the Thursday session. And the Thursday session after Globex opens, then Asia opens, and then London opens at 3 a.m. Eastern, and then Wall Street opens. The futures are tracking the buying and selling of stocks around the globe. It follows the sun. Okay, S&P still trying to move up to that. See? Take one more look at the Dow. The Dow got to it. It's above it, but it's still not a tradable event. The Russell has stretched pretty good. This is going to be, if this turns out to be a head fake, then the move to the downside could be quite brisk, because many people have been lured into this long side on the Russell, I would think. So.
Oh, we still have the gaps to fill from Sunday.
Oh, yeah. Yeah. Oh, that's true. Guys, we don't see gaps very often on futures because they trade around the clock. Sunday nights is typically the only time we see gaps in the index futures, and they almost always fill. Typically they fill in the first couple of hours Sunday night, but almost always during the first session of the week, the Sunday, Monday session. But every now and then we'll have a situation like we had this week, where we had a gap higher open Sunday night that still hasn't filled. And so those alerts down there are still valid. Okie doke. All right, guys, I see lots of you here. If you got a question, please put it in the chat box. Now the NQ is starting to maybe build a red candle. Halfway between where we are is the step line and red and falling. So we would need to get below both of those, and then 12.9, 12.905 down to 12.895. Yeah, that's even worthy of an alert, I think. We have an alert out there, and so that it starts at 12.810. No? Oh, that starts at 12.810. This one would start at 12. Yeah. And so on this alert, it will say previous alert still valid. Alert number 6706. QH21. So it'll be short. $12.905.
Well, actually, I'm looking at the gaps. That's why I couldn't find it. So we've got the gap fill here. It
we
happened.
did.
Yep.
Okay.
It was short at 129.24.
Well, anybody have any questions on that? On what gaps are? What does a gap fill mean? Why is it such a high probability trade? Floor is open for questions. Okay, so this in-queue alert that I'm putting in the channel, to be short, 12,905, initial target 12,895, that's $200 per contract. In the weekly trading zone at 12,885/1286, and then the previous alert is still valid. Price has not gone down and triggered the previous alert. So that's what I call your inventory. Almost any time you open up Telegram and go to the alert channel, you'll have inventory that you can work with. Now, once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. If you've watched any of the afternoon broadcasts when I'm going through and, covering all of the logic alerts, the CTA alerts, it triggers once, gets back below the trigger, triggers again, sometimes twice, 3, 4, 5, 6, multiple times, okay? So if you open the alert channel when you wake up in the morning and it's like, oh man, if I'd been trading the London Open, I could have caught this alert here. Well, there's a very high probability that if it triggered while you were sleeping, if it hasn't already triggered again, there's a high probability that it will. Important prices, important areas are almost always tested.
And really, this is an example here on the NQ. I checked the other gap fills, and we're still way off on the Dow, the Russell, and the ES. But you can see that here on the NQ, we've traded above, closed above the alert, and now it looks as though we may have that,
do it
play
again.
back and do it again. We have right here in that area is where we do have potential support. So you would want to take that into consideration. So this is also
now right there where Valerie's talking, guys, see as this red candle is coming down, the step line and red and falling, because they're below price, not beside price, those may very well become good support. And so that's why the alert I just put in the channel, where Valerie noted it by typing in 12,905 right there, we need to see price get below that potential support, get below the swing low of the previous candle. We're printing a red candle. Prior to that, we had the blue candle. You see that little wick on that blue candle. We want to get down below that. Did I get below that on my entry here? No, I don't think I did. The low of the previous candle, 93.5. So that's okay. That'll still give us plenty of room to get down to the zone. Okie doke. Any other questions, guys? We're going to have to wrap this up here. We're already 6 minutes over. Do anybody have any final questions? We'll do this again, maybe not tomorrow, maybe we'll do it on Friday. Our afternoon broadcast, you can watch it at youtube.com/CFRN, or Valerie maybe knows how to post into this room, or we'll post it in the discussion group in Telegram. Remember, our discussion group is open 24/7, 365. We're family. We treat everybody with dignity and respect. We all speak the same language, BBC, WTZ, okay? Each trading group out there has their own language, their own lingo, and so do we. We're no different in that respect. But you'll meet people who will welcome you. They'll be happy to answer questions that you have. If you got something you don't understand, you can always private message me or Valerie or Michael, but you can also just ask the group, because they're happy to share what they've learned and their understanding of markets and how price flows. Okay, Valerie, do you see anything worth waiting around for? I know you got to do recap and
no,
go to the makeup trailer and get my radio face on. So.
Yeah, well, other than what we expect to happen, it was the pullback to the BBC. I mean, beautifully on display here this morning. So thanks, guys. We appreciate it. I guess, we can't say sorry there was no opportunities. It would have been nice, but I think just learning that just because we're traders doesn't mean we have to be trading is also an important lesson for this morning.
It's huge. It really is. Now, let me see.
I'll track these trades we talked about this morning and report back in the group later today.
Okay, guys. All right. Thanks for coming, and we'll see you in the afternoon broadcast, which starts in about 22 minutes. See you there.
Okay. See ya.